Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. Today's date is January 25th, 2023. This is the Morning Forex Technical Report where I take a look at some of the major currency pairs from a bias perspective, from a risk-defining perspective, from a target perspective. All those things go into being a successful trader and defining risk, limiting your risk, so on and so forth. So let's get started. I'm going to mix things up by starting with the dollar Canada today. Why? Because we have the Bank of Canada decision. Today, the expectations are for a 25 basis point hike to 4.5% from 4.25%. However, Adam points out in an article or a post that he put up yesterday how there may be the Bank of Canada may be one of the first central banks to move to the sidelines. He points out that there are a number of times that the Bank of Canada has surprised the market in recent history. And certainly with their hiking their rates at unprecedented pace last year, and that has put a crimp on the potential spending for consumers as a result of higher mortgage rates. Most of the mortgages within Canada are variable rate mortgages, and so that has a direct impact on their spending pretty immediately, or in short order. So that article you want to look at, preview why the Bank of Canada would be the first to the sidelines. Doesn't necessarily mean that they're going to do that, but it's something to be aware and prepared. Taking a look at the dollar Canada from a technical perspective, looking at the price action over the last few weeks of trading after rotating to the downside earlier this month. This is a daily chart. Price moved below the 100-day moving average, and in the moves to the upside over the last week or so, the price did try to get back above that 100-day moving average. We had one day where the price moved above it, but could not sustain the momentum. And the very next day, the price used that moving average as resistance and rotated back to the downside. We are trading near the 50% midpoint of this move. This is the last trend move to the upside here for the dollar versus Canada. That 50% comes in at the 133.52 level. We're just above that at 73. So break below the 50 level with momentum and look toward this trend line connecting just these most recent lows through here. Comes in around the 132.94 level. And then we have this swing area down here where we have swing high. We rotated to the upside and then reestablish support here, also against the 100-day moving average, mind you, but it was also near this swing area here. So if we break below that level, we're going to have to contend with not the 100-day moving average, but the 200-day moving average, 61.8% retracement level, and this swing area. So guess what? This area near the 132.044 area level is going to be a key support target on the downside. Should the Bank of Canada raise rates, maybe be more hawkish, sends a Canadian dollar to the upside. On the downside, I want to focus or take a look at the hourly chart here, because we have some clear resistance up ahead. In particular, we have the 100 and 200 hour moving averages, as you can see in trading here this last week and early into this week. The price has been able to move below the 100-hour moving average and then below the 200-hour moving average. Each of the times the price has moved back toward that 200-hour moving average, price has found sellers, push to the downside here and here, and that has produced a ceiling area. If we're able to get above the 100 and 200-hour moving averages, then we'll look toward this swing area through here near the 134.36 to 134.41 level. The 38.2% retracement of this move to the downside here would be in the next target at 134.59, and then we look toward the 100-day moving average in this swing area up here, where we again have a number. It was a nice floor, and then became a ceiling, then moved above that ceiling, and then moved sharply to the downside. Revisited that area in trading last week. So this area near the 135 level, 135.12 to be exact, up to 135.26 would be a level that we need to get to and through on the top side to increase the bullish bias. That, of course, would be a Canadian dollar moving lower. So that would be the surprise move from the Bank of Canada. So be aware of these levels, because sometimes the market takes a sharp move to the upside and then rotates back down, retests other levels before rotating back to the upside. It's really, anything can happen, of course, in the foreign exchange market. So we have to be aware and prepared. On the downside, by the way, you can notice here a number of different levels through here that the market is trying to hold support against. We saw that on the daily chart as well. So I think that this analysis gets you up to par what the key levels are and what is going on at 10 a.m. Again, the Bank of Canada will make that interest rate decision. Let's take a look at the euro versus US dollar. And what we notice here from a technical perspective for this currency pair is the number of times the market has tested the 200-hour moving average and more or less found support buyers yesterday. We came down to that level, found support buyers against the level and rotated back to the upside, moving back above this swing area, which was confined the pair for some distance here. This week we've admittedly made a mess of that swing area with the ups and downs that we've seen in the trading here this week. But the one consistency is that the 200-hour moving average did hold support. In trading here today, because these moving averages are moving a little bit further apart, the 100 and the 200 I'm speaking to, the price found support against the 100-hour moving average. It may have also come as a result of the initial move to the upside that failed against the high price that we saw earlier this week, rotated back to the downside and found support near the 100-hour moving average. It was just a distance away, and so we use that 100-hour moving average as support. Guess what? We're going to need to get below the 100-hour moving average to increase the bearish bias, and then the 200-hour moving average in order to confirm the bias to the downside. That's for the euro versus US dollar. Absent that, and the buyers are still in more control, and by the way, above this swing area through here as well. So that's good news for the buyers as long as it can hold that support. Finally, let's take a look at the dollar versus the yen. I'm going to put it on the hourly chart here. Why? Because we are back down, retesting the 100-hour moving average. We actually moved below it in the early New York session here, but could not sustain momentum. And we're back above that level. This level comes in at 129.76. The move to the downside was helped by a break below this trend line on the hourly chart. And trading yesterday, the market ping-ponged, I guess, between topside trend line and coming down toward this bottom side trend line. Early Asian session, we tried to hold support against that level, move higher, and finally the market gave way, and we broke below that trend line and moved down toward the next target being the 100-hour moving average. Moved a little bit below that, but as you can see, we're trading above and below that 100-hour moving average. Comes in at 129.76. That will be the barometer for traders in the short term today. If we move to the downside, the 200-hour moving average will be the next target. That level comes in at 129.14. On the top side, we'll watch the 130.098 level on the underside of this broken trend line. Oftentimes, the price will come back to that trend line and find resistance before rotating back to the downside. So there you have it, a look at some of the major currency pairs with a focus today on the Canadian dollar as we head into that Bank of Canada decision at 10 a.m. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.